Welcome back to the Playmaker Circle, giving you some news you can use, and you know what I do, drop nothing but jewels. Right now we're finna do a quick video. We're gonna be talking about overtrading, impatience, risk management, and some mistakes to avoid. We're gonna get into the game right quick. We're gonna get straight into it. Now you see SPY gapped up about 1.5% right here. Closed the gap from last week on the daily. So we're gonna go down to a smaller time frame, and we're gonna play bar for bar as if you were scalping. You scalp on smaller time frames. We're gonna get into the scalping strategy in another video. So I'm gonna show you bar for bar what you would have seen live when the market opened this morning. And this is on the 5-minute time frame. You see first candle opened up solid, second candle solid, third, fourth, fifth. So where you see this right here, this is a demand being filled. You could have entered after this candle. That would have been a confirmation, and with your rally out of this demand zone into the next supply. And you see it's been playing back and forth in between these supply and demand zones all day. So going back and forth, it's consolidating, it's moving sideways. Now once you see a solid candle like this, and you pretty much got high volume and you want to enter with a large position, from here to here probably could have made a couple $1,000s. But if you go down on a minute, this is why your time frames are important. You can't get tricked by the smaller details. You always got to pay attention to the bigger picture, because on the minute time frame, this is what you would have seen. On the 5th minute of the day, you see a rejection. You see demand getting filled before it start moving higher. Now, originally, if you would have entered here and you hold that position until it gets up to this area right here, somewhere in the supply zone, you would probably want to sell, make the play, and then you see that this would have drowned out probably like good 40-50% of your profit right here just off this move. So you probably would have sold right here. If you had discipline, you could have sold right here, or you could have held through this until it moved up to the next supply zone. You know what I mean? Just reading off, going based off your indicators. But if you look at the volume, you see the volume was dying down. Looking based off of the indicators, you would have seen the MACD would have turned, the signal line would have went down, RSI was moving down, so you would have think that the price was rejecting and supply was being filled in this zone right here. But that was not the case. You see it dip below this moving average, and it was quickly bought back up into the next supply zone, and it's been consolidating between both of these zones right here. Now this is a risky move to make, but I've made this move in an hour and a half. You could have easily made you some thayas from open to the high, but it's a high risk because every rejection that you see is a risk of reversal. So that would have caused fear of failure. That's why it's so important to have your supply and your demand zones mapped out. You got to know where supply and demand is. You got to know where your support and where your resistance is at. And we're gonna break all this down in a whole nother video. So y'all gotta keep watching the videos. Trade more like a business rather than just trying to get rich and trying to get money. You have to trade. You got to act like a business. You got to act like an institution. You got to think like them. You know what I mean? Because they move against you, and you see moves like this would have burnt up the premium on your contract, and you would end up losing money in the end. So yeah, you see consolidations like this is what theta eats up at the delta on your contracts, and your contracts become less and less valuable over time. So you got to watch out for things like this, or if you trade with a higher account size, you could scalp these type of moves. You know what I mean? Just get in and get out in between and move in between these demand zones, and that's when you place in multiple trades a day. But more than likely, if you're on a smaller account size, your highest probability, you probably gonna try to capture moves like this right here. So you want to kind of swing for that 0.8 to 1.5%, because you're never gonna catch the whole move. You're not going, if the market moves up or down 3%, you're not gonna catch the whole 3% move, because you're just not knowing what the market is gonna do. The market do whatever it want to do. It don't do what you want it to do unless you're playing with the M&Ms or the big B's. You know what I mean? The market's not gonna do what you want to do. The retail traders has no type of impact on the market, and y'all have to remember that trading with smaller accounts. You just kind of gotta trade the trend and ride the wave. Yeah, that's why I just wanted to make this video right quick to show y'all on these type of quick moves that you can make $700-800 a day, but the market don't always play this way. Now I'm gonna be doing a whole nother video on the different strategies on how to play the gap. So tomorrow, let's just hypothetically speaking, I'm gonna show you on the gap strategy. You see, this is from last week. It was a holiday yesterday, so the market wasn't open. You see this gap here was closed today. So what probably happened within the next few days you want to look out for is this gap being filled. Price is going to come back down and move back down to this demand zone, and then you can go short as you get your confirmation. You know, the price moves below the 8 EMA, the VWAP. Yeah, the market's so chopped and screwed right now, you just can't hold a position. It's risk. It's a real high risk to swing a position, to hold it. You know what I mean? So that's why I'm just strictly just day trading the options right now until we got a clear direction on the movement in the market, because the whole recession going on, it's going up, it's going down, it's going up, it's going down. So it's real risky. So you don't want to hold positions. If you buying stocks, that's another story. You just want to buy it at the lowest price. You want to keep averaging down. I'm trying to stick to the basics with the tutorial videos, with the informational videos on how y'all making plays, because I'm working with a lot of new people, and you know what I'm saying, they just kind of getting into the game, just getting their feet wet. So I'm trying to keep it short and simple for y'all. All right, so we're gonna end that video on this note. Y'all keep an eye out for the next video, and also watch my vlogs, because we doing a giveaway pretty soon. It has nothing to do with this, but if you want to enter, you know what I'm saying, you gotta watch all the videos, and I'm giving all the information out. We giving away something crazy, so y'all gotta watch my vlogs and tune in with that. Today's Tuesday, so Wednesday we're gonna make a pickup, and we're gonna be running a giveaway until next month. So y'all gotta tune in for that for sure, because it's gonna be something crazy. I'm telling you, it's something you don't want to miss. All right, till next time, get with y'all.